Hi everyone, I am Punya Aggarwal, ACCA affiliate, and I'm starting with this debrief session for your pre-December 2024 attempt mock section A, question number 1 of your AA paper. So this will be like a brief, explanation of the questions that you have already attempted. So make sure that you first attempt the paper, then see your marks, and then if you have any doubts, any questions, then watch this video. Do not watch this video first and then go on to attempt the paper because that will defeat the purpose, right? So let's start with the first question, the first case study that we have, which is Clear and View company question. So let's start with reading the question. Okay. You're an audit manager of Clear and View company, and you are considering a number of ethical issues which have arisen in the firm's audit clients. So the first client, that you have 3 clients over here, and then you have 5 questions over here, right? So let's see what all do we have over here. The first company is your Kyoka company question, Kyoka robotics company question. Okay. So okay, just a minute. Okay. So over the past few years, Clear and View has provided both audit and non-audit services to Kyoka, a public listed entity. So it is a public listed entity, and we at Clear and View are providing them with both audit and non-audit services. I hope you people are aware of the examples of non-audit services. It can be any, it can be limited assurance, it can be tax related services, it can be other related services. So Kyoka has contributed 35% of ClearView's total revenue for the past 4 years. If you have revised the syllabus really very well, then bells should start ringing in your head when you have read this particular statement about 35% of the revenue for 4 years. Okay, so now let's read the first question, because this first question is basically talking about this particular company question only, right? Let's read it. Which of the following actions should Clear and View take? So actions is basically your remediation actions or your mitigating actions, right? So if the total fees of Kyoka represents more than 30%, which is of course the case, right? It is 35% of the firm's total fees for 5 consecutive years. So it's already been 4 years. We all, of course, we will be doing that for the current year as well. So we need to have some mitigating actions to reduce this, or for this particular fee structure. Okay, so let's read it and I will be telling you which answer. So the best way that you can answer these MCQs is using the elimination method. Okay, and once you read the statement, see why this will be an answer or cannot be an answer. So do that, and then you'll be in a better position to answer it. Okay, so let's read the first statement. It says, continue the audit engagement after communicating this fee dependency to those charged with governance. Okay, so think to yourself, do you think this is mitigating the problem that has arisen over here? It's not mitigating the dependency, the high fee dependency. If we continue the engagement without addressing this high fee dependency thing that is there in the question, it does not mitigate the self-interest threat that is being arisen. So this is basically your self-interest threat, right? So if I continue with the engagement, there is a possibility that this is not being mitigated. So my purpose is defeated. So definitely the first is not the correct answer, right? Let's move next. Arrange for an independent professional accountant who is not a member of the firm to review the 5th year's audit work before issuing the audit opinion. So if I arrange for an independent reviewer, it will definitely eliminate this particular threat, because he or she won't be from my particular company, right? And he will have his own independence and objectivity. So might be a particular possible mitigating action. So I'll keep this on hold and I'll read the next two as well. Okay, cease to be the auditor after the 5th year, as so no safeguard can mitigate the self-interest that created due to the fee dependency. This is not the case. You can definitely reduce the self-interest threat which has arisen. Ceasing is very premature. Basically it means that this is not actually the first step towards doing a mitigating action. This can be the last step if you do not have anything else left. This is basically the last resort that you can go ahead with. But of course this is not the first step that we can do. So of course this is also not true. Then request additional fees from Kyoka to reduce dependency. Okay, so if we are already taking 35% of the company's fees, if we take additional, for example, 5%, it will lead to 40%. It will again increase. So this is not about the fees or the amount of the fees, rather than it is about the proportion, that it is being taken at 35% of the entire revenue which is being earned by our company, which is Clear and View. So it's not about the amount, it is about the proportion of how much percentage of from the company are we taking. So I think the last one is also not the correct answer. So in my opinion, the second one is the correct answer, because this becomes the most relevant amongst all four. So I hope that you understood why did we go ahead with our fourth option, like the second option, I'm sorry. Okay, next question. Very, very easy. You just need to eliminate and see which is the most relevant one. Identify the reasons also, that why you think that the first one is correct or why the second one is correct, right? Okay. So next, let's read the next part of it, which is Shinra Engineering Company. The audit engagement partner who is responsible for the audit of Shinra Engineering Company, a listed company. Again, it is a listed company. So listed company, pertains to more threat than a non-listed company, as you people would know, has been in place for 8 years. Oh my God. So already there's a threat of 8 years, right? And her son has just been offered a role with Shinra as a sales manager. Again, self-interest thread, bells should start ringing in your heads. This role would entitle him to shares in Shinra as part of the remuneration package. So he will be entitled to shares of the company. Again, self-interest thread. Okay. Shinra's board of directors is considering establishing an internal audit function, which is good. The board has suggested that they may wish to outsource this to Clear and View. Now, here comes your next thread, which is self-review thread, right? Because I am doing the external audit, I will be doing the internal audit. Of course, I will be reliant on my internal audit procedures. So it can lead to self-review thread if proper mitigating actions have not been put in place. Okay. Next, the finance director has suggested to the board that if ClearView and Company is appointed as internal as well as external auditor, which we are considering, then fees should be renegotiated with at least 20% of all the internal and external fees being based on the profit after tax of the company. Your bells should again ring that this is a self-interest threat, intimidacy threat, as this will align with the interests of Clearview and Company and Shinra Company. This fee income would be significant for Clear and View. So again, you are getting intimidated because of this. There is a self-interest thread, there is a self-review thread in the whole question. Okay. Now let's read the answers so that we are able to identify what is the major issue. Okay. In relation to the audit engagement partner holding the role for 8 years, which is, I think, the first paragraph it's talking about, and her son's offer of employment with Shinra Engineering Company, which of the following safeguards, so we are talking about the safeguards over here, okay, should be implemented in order to comply with ACCA's Code of Ethics and Conduct. Okay, so now let's start reading the, okay. The first one says the audit engagement partner should be removed from the team. Of course. So if you know the exact, this is basically a knowledge-based question. You do not actually have to refer to the case if you know that, there is an 8-year thing which is already there in the company. So you know that there is a cooling off period which should be there, and there should be a rotation of the audit engagement partner if he or she is there with the company for more than, a lot of years, right? So this is actually a threat, and this is the only safeguard that you can have. So this the audit engagement partner should be removed because he has been practicing for 8 years. Maybe he can come after a few years, but there should be a cooling off period for the same, right? I will also be explaining the next points why there should not be the points in case somebody thought that this was. Okay, an engagement quality control reviewer should be appointed. So now this because, okay, so because this is a listed company, this thing will already be in place. The engagement quality control reviewer will already be in the company. So this is nothing extra which the company will be doing to mitigate or have a safeguard for the 8 years thing. So of course this will not be the correct answer for this particular thing. Okay. A third party, such as a professional body, should be consulted on key audit judgments. Of course, not when we have our internal audit department, when we have the external audit department, we won't be having a third party to do the key audit judgments. That is again not mitigating or safeguarding our 8 years thing. We need to focus upon the 8 years thing, right? And then the last part says clear and view should resign from the audit. Again, this is the last resort. This is again not last resort. Why? Because it is unlikely. See, the thing is that here you are the audit firm, okay, which is clear and view in this company. He has many engagements, and they all have their audit engagement partners, right? So because of one engagement partner, they cannot scrap down their whole project with the company, right? They can just simply remove the person and continue with the audit of from using a different audit engagement partner. So again, resignation is not the first resort towards this particular issue. So identify what issue the question is actually talking about, and then think of it as that, and then try and frame your answer, or try and then eliminate the answers from the question. So the first one, which is the audit engagement partner, should be removed from the audit team, is the correct answer for this particular question. Let's move ahead. Okay. Next, okay, this is again for Shinra company. Let's read. If Shinra's internal audit assignment is accepted, so basically it's talking about this over here, that they will be doing internal audit also and external audit also, okay? Which of the following statement is true regarding the proposed basis for the fee, okay? As long as the total fees, just, yeah, as long as the total fees received from Shinra is less than 15%, no safeguards are needed. Very, very wrong statement. If you are aware of the ACCA's code of ethics, this is a very wrong statement that we do not need any safeguards for the same. We do need safeguards, and here in this case, it's 20%. Right, so it is of course a false statement, right? This the proposal is in relation to the fees, because this is contingent fees, right? This is contingent fees. Why this is contingent fees? Because this is based upon the profit after tax of the company. So this is again a very, very wrong statement. Next, the client should be informed that only internal audit fees can be based upon. No fees has to be based upon the profit after tax. Whether it is internal, whether it is external, if any of the fees is based upon the profit after tax or profit before tax or any other thing related to the company, it will create self-interest threat, right? I hope that you people know the explanation also for the same. Then third one is the fees should be based on engineering profits before tax. Again, same thing I just explained, that whether it is before, whether it is after, we are not concerned. It is self-interested, and this will not be a true statement, right? No safeguards can be applied, and this basis for fee determination should be rejected. Absolutely correct. So if you remember the ACCA's code of ethics, this is a strict guideline from ACCA code of ethics, that your contingent fees is strictly prohibited to be used, that you cannot have a basis for your fees, like the auditor cannot have a basis for their fees which they are getting from the client. I'll also explain it quickly. Why is this reason? I'll just give you a very, very small example. I know most of you would know it. You can skip the video if you do not, if you already know the reason, but just for the people who do not maybe know it, let's take an example. There's an auditor, okay? And then there's the company ABC, okay? So the profit of company ABC previously, for example, in 2024 and 2005, okay? So in 2004, the profits were 100, and the auditor audited it, and it found that the profit should actually be 80. So the company amended it, and the final profits came out to be 80. Okay. Right now, the auditor is not getting anything out of the profits, basically. Okay. Now what happened in 2005, the profits came out to be 100, but now the company said to the auditor that your fees, the fees that you're charging us, will be based upon the profits that we are getting. So if, for example, we will be fixing a particular percentage, for example 15%, or let's suppose say 10%. So if whatever our profits come out to be, you will be getting 10% of that. So if now here the auditor has a self-interest threat, because if the profits are 100, he will be getting 10% of it, which is 10 10 rupees, for example. Let's say 10,000. Okay. Now, but if he found that no, the actual profit again for this year should be 70 in terms of 80, Now for 70, if he is doing, 10% is only 7,000, right? Now he will be very reluctant to reduce the profit because ultimately his fees is also related to that profit. If he reduces it, his fees also reduces. So maybe he will be reluctant and he will not change this 70 to 100, like 100 to 70, and it will be an independence issue, right? So that is the reason that that ACCA Code of Ethics strictly prohibits this contingent fees scenario. I hope that this is now clear to the people who were not clear before. Okay. So basically, this one is the correct answer. Let's move ahead. Okay. These are not very difficult questions in paper. You do get them, but your simple approach should be that you are reading the question, you're reading the case study actually very, very nicely, deeply, not from the above, and then you're also reading this statements really carefully, and then you are eliminating the questions. So let's read the last company that we have, which is Arcadia company. Arcadia company is a listed computer software company. Again, it is a listed company. The board of Arcadia has asked if Clear and View and company can take on some additional work and have asked if the following additional non-audit services can be provided. Okay, let's see. Routine maintenance of payroll records. Now, bells should start ringing in your head that what type of risk, like what type of threat can arise over here. So here providing account, see, if you're providing any sorts of accounting or bookkeeping services, it will definitely lead to some self review threat in the books of accounts, right? So it will lead to self review threat because then ultimately if you're preparing the bookkeeping, if you're preparing the financial statements, and then we are ourselves auditing the financial statements, it will definitely create a self review threat, right? Then next one is assistance with selection of a new finance controller, including the checking of the references. Again, the bell should start ringing in your pill because this is an example of recruitment services, if you remember from your books of your studies of your syllabus. So it is a self-interest threat, right? Because we are providing recruitment services. It's not only self-interest, it can be familiarity also, it can be intimidation also, right? And then the third one is tax services, whereby ClearView and company would liaise with tax authority on Arcadia's behalf. So if you know Arcadia's behalf, it is definitely advocacy threat because here we are working on behalf of our client, right? Where we can represent him, our client. So that can be an issue. Let's read the question. With regards to the additional work of Arcadia company, ignoring the potential impact on the total fee levels, which of the following options correctly identifies a threat to, oh my God, I have already told the answers, okay? Identifies the threats to independence from providing the above non-audit services, okay? So if we see the first one, our first one will be what? Our first one, I just told right now that our first one will be self-review threat, because we are doing payroll records, just like accounting and bookkeeping services, we're doing payroll records also. We will be, reviewing it again when we are doing the audit. So it will lead to self-review threat. So the first one has to be self-review. So it's either option B or it's option C. Okay. So the next one I told, assistant with this one is again our recruitment services. So it is our self-interest or our intimidation or our familiarity threat. So self-interest. So second one is self-interest, this one. And third one is definitely advocacy. So advocacy is this one. So C option should be your correct option. I hope that you understood this particular question. Very, very easy. I explained when we were reading the question. So I think it should be not an issue. Last question for this particular case study, and then we are done with our, the first case study of our mock. Let's go. Okay. One of ClearView and company's listed clients has an audit committee. So very good. It is a very good thing, positive thing that we have an audit committee. Very, very good. Identify by clicking on the relevant boxes in the table whether each of the following statements is true or false. Okay, very simple. So for this particular question, you should know everything about audit committee. Please revise this topic. This is a very, very important topic. It directly comes into your paper. It can be a part of your section B also as a knowledge-based question, or it will definitely be a part of your section A as here it is, right? Okay. So the first statement says that the audit committee's terms of reference, just a minute, yeah. The audit committee's terms of reference should include reviewing and monitoring the external auditor's independence or objectivity. Absolutely. This is one of the key roles and responsibilities of the audit committee, that they should be able to review and monitor what the external auditor is doing and how is he independent or is he objective in his approach or no. So this is a very, very true statement. Okay. Next, the audit committee's terms of reference should include appointing and removing a very, very wrong statement. Wrong statement. Why? Audit committee can only, suggest, or it can only recommend something, recommend or suggest, you should appoint this external auditor or you should remove this external auditor. But the final verdict is being given by only and only shareholders. Shareholders finally decide who will be our external auditor or who should be removed from the as the external auditor. So this is a false statement, very, very wrong statement. Now the next one is, the third one is, the audit committee's terms of reference should include evaluating and monitoring the effectiveness of the internal audit function. This is, again, very, very important. I think one of the most crucial roles and responsibility of an audit committee is to check the effectiveness of the internal audit function of the company. So again, this is a true statement. So for this particular question, this was again a knowledge-based question. So you should be just if you just revise the audit committee topic, you will be good to go with this particular topic. So I hope that this video was helpful. If you have any particular doubts in any of the questions, you can feel free to comment down below. I'll be more than happy to assist you with. And yeah, stay tuned for the next case study.